In this video, I'm talking with Miguel Perez-Santalla of Heraeus Metals in New York. Heraeus are one of the world's largest refiners of precious metals, and we're talking about the hashtag silversqueeze. And while Miguel believes that there are many reasons to buy silver and is bullish on the silver price over the long term, he's concerned about certain narratives that are circulating on the web recently. Stick around to the end of the video where Miguel gives us his number one reason why he believes that silver and gold will go much higher. Now, there are many sides to a story, and as a result, many differing opinions. At Goldcore, we believe that it's important to consider all sides of the debate so that you can make more informed investment decisions. And if you want to see more interviews like this with industry experts and thought leaders in financial markets, subscribe to Goldcore TV and hit the notification bell now. Miguel, welcome to Goldcore TV.
Thank you.
Now, you finished your article, your blog post from last week by saying there are plenty of reasons to own silver, but the false conspiracy theories being spread about are not one of them. What false conspiracy theories specifically are you referring to?
Well, in this particular one, the conspiracy theory is that the precious metals world, let's say the banks and the traders, are trying to hide the fact that there's not enough metal out there to supply the market. Which is far from the truth. It's just all about timing. So they're deriving this from the fact that the ETF decided to change their prospectus to give them time to get the metal into the vault. And that's exactly what the language is all about there. And the fact that the one prospectus also mentioned that the squeeze is part of what's causing the problem, and that it would cause a spike to the price, which it did, does not infer that they're upset with the price going higher. They're not upset with the price going higher. They're just reporting exactly what really happened and why they need to do this. And so what happened is that in a short time period, and even I can tell you that the Wall Street Bets folks, which is the Reddit group, drove the GameStop thing, decided to jump in the bandwagon of silver, thinking that the silver market is shorted, which, yes, there were some shorts and they cleared out some shorts in the market, which is the norm. There's some people who are short and some people that are long. But what they didn't expect and didn't realize that a lot of what they see as shorts are not really shorts. They're hedges of people being short the contract because they have contracts on the other side with producers. So they're hedging, they're buying the metal and hedging it on the exchange. That's part of the normal function of the marketplace. Just like Goldcore may inventory precious metals, they hold the metal and they sell futures. Doesn't mean they're short. So they're reporting on only one side of what they see in the marketplace. So yes, they did have an immediate effect. They started buying ETFs and they started buying physical silver products throughout the board, wiping off the shelves of all the retailers and investment retailers on the web and on the streets. Why? Because, you stock 100-ounce silver bars or whatever size bars that you have and gold bars, and you stock a certain amount. And then when they run out, you have to reorder. It doesn't mean there's no more. And silver, the difference with silvers, let's put it this way. Gold is very dense. So it holds high value in a small package, and you could ship it overnight in FedEx.
Yeah.
The same value in silver is a truck, and it takes a long time to get from one place to another. You can't ship it by air. Actually, you can, but it's not the norm because it's so expensive. So it's shipped by boat or by truck, land. So let's say the boat lands in California and it's going to New York. It's going to drive across New York. It's not going to fly, so it's going to drive from California to New York. Same thing, London. And in my article, I make the point that the two markets are talking about, New York and London, they don't produce silver. the silver comes from somewhere else. So it's coming from Latin America, from Poland, from all these different mines. And silver is a byproduct of other mining, principally. 60 to 70% of silver produced is a byproduct of lead mining, zinc mining, and gold and copper mining. So it all comes from different places. And so typically contracts go that there are monthly deliveries. So here we have something happening in the middle or the beginning of the month, wiping out existing stocks. And then all of a sudden there's this huge demand. And there are traders that have more stocks sitting around, but that got wiped out because of demand. The immediate short-term demand was huge. And I'm not taking that away from them. They did buy a lot of precious metals, but there's no shortage of it. It's coming. So it's coming back. The thing is the shortage of products. So for instance, 100-ounce silver bars, the manufacturer of 100-ounce silver bars only made so many. They didn't expect this. Now all of a sudden they got to get the silver in, they got to melt it, they got to pour it, they got to stamp it, they got to shape it, whatever it is, product. And those rounds too, which is very popular here in the US market. I don't know what it's like in Europe, but over here very popular, the 1-ounce silver rounds. So they have to make all these things. It's going to take time. It doesn't mean that we're out of silver. It means that the pipeline has to be filled, produced, manufactured, and come to market. So that's really what's going on here.
And then specifically the ETFs, when they made these change in their prospectus, they're trying to guard against that short-term shortage, or what are they specifically trying to do?
Right. They're trying to protect themselves from. They did never envision this, that the market would come in with this huge demand in a short time and suck. Literally, it was like a vacuum, suck the metals out of all the inventory. So they needed time to get it in, and they did get it. One of the things that happens when there is a short-term increase in demand and only a limited amount of immediate physical supply is that the premium goes up. So in the wholesale market, the silver premium has gone up also because of COVID-19 over the last years. COVID-19 has caused a lot of bottlenecks, a lot of expenses to go up in shipping and whatnot. So silver wholesale premiums over on the large bars were like, let's say, 10 to 15 cents an ounce, and then they went to 25 cents an ounce. And then during this squeeze, jumped up as high as 50 cents an ounce. So that's just to go to show you what it costs. So they have to pay that premium to get the metal in. So it is a cost direct to the ETF. So everyone's paying it. No one ever, gets away with not paying what the market is. So that's the current market value. When things calm down, then the premiums will come down on all products, even the retail products. I understand that, like for instance, 100-ounce silver bars jumped to $4 an ounce premium, which is very high. And why is that? Because people are willing to pay more for immediate demand, and the person who's holding it is only willing to sell it for a better premium. And so my point is that it's this whole squeeze. Look, I'm happy about it because it created a lot of business for our company. It drove a lot of business, a lot of demand. It's good. We're in the silver business. I'm very happy about it. But my point is that don't go around saying that, these people, they have ulterior motives. They're trying to keep the price of silver down. They don't have the silver, and that's what they're full of it. The silver market is going to go through the roof. There's no silver in the market. There is silver. It's just the pipeline is not there. It's got to fill up, and it'll come out. So if you're patient, you can pay less. If you think the price of the actual commodity is going to go higher before that time period, then obviously you still want to pay it. But there's other vehicles to use to avoid paying the actual physical premiums that hit the marketplace after that. So let's say you could buy it, on some exchange or unallocated, and wait to take production later on, your premium should come down. And that's really essentially what's going on. It's just the squeeze caused an incredible demand that sucked up all the existing inventories. Just imagine, it's a lot like the COVID-19 thing where toilet paper and paper towels were gone because people thought the end of the world was coming, right? All of a sudden you couldn't find toilet paper. And I remember my wife going crazy, going, "Oh my God, we can't get toilet paper. We got to buy toilet paper." I said, relax. We have enough toilet paper for a month. when it'll come out again. It's just that it was just taken off the shelves immediately by people who, built fortresses of toilet paper. So it's the same thing. But now toilet paper is still back and it's still the same price it always was, isn't it? And that's the same situation we have here.
And we've seen the Wall Street Bets Reddit or subreddit, and now there's a growing subreddit, Wall Street Silver, and they have, I think, at the last count, about 34,000 members. And there's a lot of new silver investors coming into the market, a lot of new silver people being turned on to the idea of investing in silver and taking physical delivery of that. And that has been a lot of the pressure on dealers and on what's been sitting on the shelves and clearing out the shelves. That seems to be the attitude of these investors is buy and hold. And it seems to be a new cohort of investors coming into the market. Do you see this as being a sustainable pressure or sustained pressure on the supply of silver?
Well, there's a twofold thing going on here in the U.S. silver market. Okay, so I'm going to speak about the U.S. and obviously the Reddit probably includes people from all over the world, but I'll speak about what I know here and what I see here in the market. First off, the U.S. market has always been very silver focused, and there's been a big market. I mean, this is historical from the mid 1800s because we had silver finds here, and back then we had two currencies. We had gold and silver running together as a currency. So our dollars were backed by gold and silver. And then all of a sudden they became only gold backed, and the silver producers did a big marketing campaign pushing silver as also a monetary product. And so that's why they continued to issue coins made of silver up until 1964. After that, so the U.S. has a mindset more of silver than gold, interestingly enough. I would say most of the rest of the world is more gold focused in terms of, buy and hold and keeping in your home in case some catastrophe happens. But so that mantra has been with us for many years about silver being important. You should own silver, hold silver, and things like that. Now, fast forwarded to where we are now in 2021. We have a very divided country here. We have a very extreme left-leaning group that's developed over the last years, and we have a very conservative, or I would like to say forward-thinking conservative group, but that is very concerned with what's going on here with the attempts to limit our rights and our freedom of speech and our right to bear arms and all these things that are going on here. So people are very, very concerned. So now we have this whole new group thinking that silver is part of their defense against that. So we have firearm sales through the roof, and the thing that followed along with that is also silver, which is to battle in case the US dollar becomes worthless. So there are people who are very concerned and are buying into silver. They're also buying into silver because they believe there is value there, and that even taking away that political split, they think that the economy is in struggle, and all this spending that the U.S. government is doing will cause the dollar to become less valuable. So we have that split. The same people who are also buying Bitcoin, by the way. So that's Bitcoin's being driven that way, and silver is being driven that way. So a lot of people are going in, buying and hedging their values or percentage of what they own in precious metals, and silver is playing an important part of that. Though I see the bigger high net worth individuals still more in gold, but we saw BlackRock in the end of December had rolled out of gold and into silver. So that's a good sign. And that's why I said there are plenty of reasons to buy silver. And if you believe in silver and you believe the dollar is going to get weaker, which I personally do at this point. So there are real reasons to buy silver. There are real reasons to invest in it. But to try and scare people and panic people that there's no silver available, I just don't think it's right.
You mentioned there anyway, Bitcoin, and we've seen a tremendous rally in the price of Bitcoin up to $58,000. And for a lot of those reasons, you're talking about people who are moving out of the dollar, and for potential dollar weakness going forward, or the dollar becoming worthless. How come we're not seeing as much of a rally then in the precious metals, and in particularly silver, if it could also fulfill this role?
Well, I mean, you got to remember, silver is up 100% from, almost 100%. It hit $30. It was $15 last year. So it is a significant rise. Now, why isn't it as well? Remember, Bitcoin, you're saying how come it's not as up as much as Bitcoin? Well, because Bitcoin was worthless and it was also theoretical. And then all of a sudden, people start to believe in it. And once they have the faith in it, they start buying it. So it was a very tiny market, and now it's grown to almost be bigger than the silver market. So silver and gold are a mature market. Bitcoin is new. So understanding and working Bitcoin is a totally different thing. So the new generation are buying Bitcoin, and they maybe not as educated as much about gold and silver, or maybe not buying gold and silver. I'm not sure, but I can tell you myself personally, I only just recently bought some Bitcoin, only because I'm not convinced. I'm not personally convinced in Bitcoin, but a very intelligent friend of mine believes that this thing could take off. And so I put a little bit of money into it. I'm not convinced, but I'll put a little bit in. And if it takes off, at least I participate a little bit, so I believe in things that you have in hand and things that of real value. I believe a lot in equities and investing in good, strong companies that produce products, and that because I believe in when you're buying an equity, you're employing people, and same thing when you're buying precious metals, you're employing the mining industry. But of course, you don't want it sitting there forever. So one of the things I tell some people sometimes is I actually like to think that when I buy gold jewelry for my wife, that gold jewelry is a form of a hedge as well. Because even though, so I'm paying an exorbitant premium over it, but at least she gets to wear it and walk around with it. And if something really bad happens, we can take it off and melt it down, right?
We should look with that one.
It happens, my friend. It happens. Let me tell you, remember my family's from Cuba. So when they had to leave Cuba, they had to take everything they could. And gold is one of those things that you can hide somewhere and take it out.
And talk to me then for a moment about the paper market for silver, because obviously the paper market for silver is huge in comparison to the physical market. And are we seeing the effect of that now at the moment in suppressing the silver price, do you believe?
Well, first off, there is no suppression of the silver price. That's the thing. There's no group of people suppressing the silver market. There are people who believe it's worth less and they're selling, and there are people who believe it's worth more and they're buying. And so when the sellers outweigh the buyers, then the price goes down. If you turn the tables, then it goes up. And that's what happened when the Reddit folks came in and they drove the price up. So when you call the paper market, what you're talking about is commodity futures trading. Commodity futures trading is leverage trading. So they put a small amount of money down to leverage and play a much bigger hand than they actually can own. So most of the players, that's why when it comes to the actual delivery month, no one takes delivery, because most of those people, the speculators, don't have that money. They're just using commodity futures to get a better opportunity to make money. Now, some people lose their shirts too. There are people who go out of business and go broke because they lost money. Just like anything else. When you leverage, you're taking more risk. You're getting more opportunity, but you're also getting more risk. So what happens is, people are putting down, let's say, 10 to 25% down margin to buy the silver or sell the silver. But when the end result comes, they financially get out of the market. So if I bought silver, all of a sudden, let's say March silver, for instance, is finished this month, right? So the contract for March is ending right now. If I bought silver, I'm one of those speculators. I'm selling the contract. I'm getting out. Unless I want to keep holding that position because it's going to go higher, then what you would have to do is sell the March contract and buy the next contract, the next active month, which is May. So you would move from March to May silver. So that's why, even though that's another one of those conspiracy theories that there's all these people buy silver and there's not enough silver to supply them silver. because they're looking at the exchange numbers. But they're not going to take physical delivery. They don't have the money. They're just in it to hedge, to play the market or to hedge, most of these people. So either the metal's off the exchange and that's why you don't see it, or these are speculators and they're going to financially settle at the end of the term.
And Miguel, a lot of people don't understand how, or don't appreciate how companies like Heraeus use the futures market and why you would use it, as in how it is, how you go about hedging your positions and why you hedge those positions.
Well, that's a good question, and I'd like to start with a little history. The first commodities exchange was a Chicago Mercantile Exchange in the U.S. The first, recognized, and it was built around wheat. And why was that? Because the producers of wheat would make wheat, and when they'd come to market, there weren't the buyers, or they weren't able to capture the price they thought it was going to be a few months earlier. And so what that did was bring people out into the floor so that there would be speculators. Speculators actually add liquidity. They're a good thing. You often read in the newspaper people, besmirching speculators. Speculators are a good thing. We need them. We need everybody in the marketplace. The more people participating, buying and selling, the more liquidity, which means the easier for you to buy and sell the product. So imagine if you had to go from place to place or make 20 phone calls to sell something. That costs you time and you don't even find out the price. And by the time you get back to the other guy, he could have changed his price. So this is a problem with not having an exchange. The exchange offers immediate pricing, and with the volume and the amount of participants in the marketplace, it gives us an immediate place to put on a hedge. So we're buying on a regular basis from mines, from refining. We're also a refiner, so we're getting materials in that we refine, and then we buy that from the customer. So we're buying precious metals on a regular basis. So before we've sold it to our customer base, which need it at sporadic different times, we have to hedge. So we buy metal, we hedge on the exchange. So we've owned the metal here and we've sold it here. And then when we sell the product, our end product, whatever that may be, to our specific customers, then we buy back the future. So we sell the metals and buy back the future. And that's how the typical commodity business works. That's commodity 101. So you buy and you sell, and you're always hedging yourself, and you're making your money on your business spreads or on your markup of your product, whatever that is. And so the same would be for a retail investment store that sells investment bars and things of that nature. They have to be hedging one way or another. They might not hedge on the exchange. They may be hedging against their bank. Their bank might offer them liquidity and immediate pricing, which there are many trading companies that do that nowadays. And with technology nowadays, it's a click of a button.
And you said in your blog again, you said there are many reasons to buy silver, and you've mentioned a few of them there. What's the number one reason that you're bullish on silver over the long term?
The reason I'm bullish on silver right now is because I think there's what I see the U.S. government doing right now is going to cause inflation, and I think it's going to cause weakening of the dollar. And I believe that we will see silver and gold rise. And gold will probably rise faster than silver at this point, but silver will follow. Silver is highly volatile and can shoot higher than gold. And a lot of people expect silver to hold out better than gold. I don't really know why some people take that position, because I personally think gold is the recognized form of money. Silver is not really a form of money. It's a form of exchange that we can buy and sell. Like I can find someone on the street and I can say, hey, I got, 100 ounces of silver. You want to buy it? And yes, they might say, sure, I'll buy it. What's the price? It's a form of exchange. But gold, the central banks hold gold. So they're the ones that dictate that gold really is a form of money, because that's what they use to support the value of their currencies. And that's how we know the good faith and credit of these countries that we do business with, and between all the central banks working together. And that's why I think silver is going to go up for that reason. I think gold will lead the way in the future, and That's where we're at the moment.
Miguel, thanks for joining us on Gold Court TV.
All right. Thank you for having me. It's been a real pleasure.
Thanks for watching. And if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to Gold Court TV and hit the notification bell now. And if you enjoyed this video, check out this other video that I did with David Morgan, the silver guru, where we also talk about #silversqueeze. Watch that next.